everyone, welcome to my channel Commerce Diaries. In the today's video, we are going to discuss about one small concept of accounting, that is the deferred revenue expenditure. Before starting this video, if you want to learn about the capital and the revenue terms which I have covered in the last video, don't forget to watch that video. I will be providing the link of that video in the description of this video. Okay, so let us begin with this video. There are some transactions which may appear revenue in a nature, but the benefit of such expenditure are seen for a longer period of the time. Such expenditures are treated as a deferred revenue expenditure. Means there are some kind of expenditure which we can treat it as a revenue expenditure, but the benefit of those expenditure which will long last into the working of our business. Such type of expenditure cannot exhaust within the year, or which we may cannot write off those expenditure in a one particular year. We will carry forward those expenditure and their benefits in the upcoming and succeeding years. Okay, so let us see the example over here. Normal annual advertising expenses is considered as the revenue expenditure which will be debited to the profit and loss account. As we know that any small advertisement related to our business or the product, we treated it as a revenue expenditure and it will show at the debit side of the P&L account. If the heavy expenses are incurred on the advertising campaign to launch a new product, means if we are occurring any kind of advertisement expenses before launching a new product or before the introducing our product in a market, so those kind of expenditure we may treat it as a deferred revenue expenditure. Then the whole amount should not be treated or debited to the P&L account of that year. The benefit occurs for the longer period of the time, hence much of the expenditure as benefit to the current year, but it is considered as an debited to the profit and loss account. Balance to be shown as a deferred revenue expenditure. Means we will treated a current year expenses as a revenue expenditure, but the remaining amount of those particular heavy advertisement expenses we will treat it as a deferred revenue expenditure which we will be write off in the succeeding years. There are some common examples of the deferred revenue expenditures. Those are preliminary expenses, cost of market research for the new products, then the commission on the issue of debentures, then the cost of issue of the shares and the debentures. These are few examples. Apart from the heavy advertisement expenditure, these things are also treated as deferred revenue expenditure. Then here I have inserted one more example which we can understood how the expenditure will write off in the succeeding years. Okay, the accounting for the deferred revenue expenditure, for example, association fees paid rupees 60,000 for 3 years, that is 2016-17, 17-18 and 18-19. So in the first accounting year, the expenditure has to be shown in the profit and loss account. As we have learned in the previous example, the current year expenses we will show in our debit side of the profit and loss account. However, the expenditure incurred in the financial year 2016 and 17, but the benefit of the expenditure enjoyed the subsequent period too. Okay, means the benefit of those heavy expenditure we will enjoy in the upcoming financial years. Hence, the amount of rupees 60,000 should spend over the 3 years, and the annual amount to be determined 60,000, that is divided by 3. The total expenditure we will divide it by the number of years in which we will enjoy the benefits of those expenditure, rupees 20,000. So the profit and loss account of the year 2016 and 17, we will be debited with the rupees 20,000, and the balance, which the total amount expenditure, we will minus those 20,000, and remaining amount, that is the rupees 40,000 of will shown on the asset side of the balance sheet. Here we will treat this 20,000 as a revenue expenditure in the year of 2016 and 17, and the remaining balance we will shown in our asset side, that we will avail those benefits in the next financial year. Okay, hence it is treated as the remaining amount as a deferred revenue expenditure. In the second year, in the year 2017 and 18, the amount of another 20,000 we will be again debited to the profit and loss account, and those balance of 20,000 we will less from the 40,000 which we have recorded in our balance sheet in the previous year, that is the financial year 2016 and 17. Okay, so again the remaining 20,000 we will shown on the asset side of the balance sheet, and we will not write off that amount in the year of 2017 and 18. Now let's proceed to the third year of accounting. Okay, so in the year of 2018 and 19, the remaining 20,000 we will be debited to the profit and loss account as what we recorded those 20,000 in the year 2017 and 18. That balance we will now debited to our profit and loss account. So as per this, we will end up having a nil balance over our asset side. So in this process, we have availed the benefits of our 60,000 rupees expenses in the 3 subsequent years. Okay, thus the amount has been spread over 3 years and accounted for the books. So this is how the revenue expenditure of the fees that become a capital expenditure in the subsequent years. So this was about this example. Now here there is a one key term I have mentioned. We have to remember this. It is the revenue expenditure, the benefit which is not exhausted within a 1 year. The expenditure to be write off over the certain number of the years. This we will treat it as a deferred revenue expenditure. Means we can say that it is the combination of the revenue expenditure as well as capital expenditure. Means initially we will treat them as a revenue expenditure, but the benefit we will be available for the longer period of time. So it is one of the feature of the capital expenditure. So it has the features of both the things, but we must know that we should choose the expenditure in the current year as a revenue, but we will write off those expenditure in the next succeeding year and we will avail the benefits. Okay, so this was all about this one of small but important concept, that is the deferred revenue expenditure. If you like this video, do let us know in the comment section and also subscribe to my channel. We will meet in the next video. Thank you.